I just want to invest in people that really want to be the best that they can be. Hello, everyone. This is Todd Scrima and Robyn, LaVassaur, and Jim Reed, and we're coming to you because you're a past client or have some association with Summit Funding. And I'm the CEO. Jim Reed is a SVP and runs one of our largest branches in the country and oversees all of our coaching division, which is a huge division for us. Robyn LaVassaur runs a huge branch, and she is an executive that also oversees all of sales in the nation. So we thought we would start doing some fun broadcasts to offer a little bit of value to our past clients because we care about you. You're our lifeblood. As you probably know, Summit is a company that doesn't do a ton of advertising and all that stuff. So different topics, we're just going to scout about and have some fun, but it's a way to pick the brain of very successful business people and hopefully take some applications into your life. This one is entitled Thoughts on Investing in Real Estate. This is a fun topic. It's a big topic. Now these podcasts are short. They're about 20 minutes long. So we're just going to spur some thoughts and maybe give some tactics. Who wants to start? This is a juicy one.
I'll go.
Okay.
So your idea, well, the topic really is, hey, should I buy investment property? Should I buy a second home? How do I make those decisions? And they're big decisions, right? Because you're going to be leveraged. You're going to have a loan or a mortgage. You're going to take on debt. And for most of us, still for me to this day, debt is very scary. I've done, I don't know how many thousands of mortgages, but when I buy a house, I'm still freaked out. And so if I'm freaked out, I know most people must be as well. So I want to share a quick idea around investment property and buying investment property. Do I think it's for everybody? Nope, I don't. Because you have to be a landlord. It is not an absentee situation. You've got to be a landlord. You've got to go buy the house. You've got to do some work to have that. So a guy once taught me a simple concept, and I want to see what you two think of it. So he's like, hey, here's what you do. Your first house you buy is a primary residence. Okay. Then you got to save money and make sure you're in a cash flow situation in your life, right? Save money every month and get to where you have at least between your 401k and your savings and maybe an IRA, you have at least maybe 80 to 100,000 extra, at least, on top of whatever down payment you would need to buy this investment property. So that's step number one, right? Number one is buy a primary residence, save some money for a rainy day. He's like, look, here's what you do. You buy an investment property. Make sure it cash flows at 75% of what the rents are. So if the rents are $1,000 a month, if it rents for $1,000, the house payment shouldn't be more than $750. That gives you some wiggle room if people move out. That gives you maybe some revenue to cover for when they damage the property. That's a really good rule of thumb. It's also how we underwrite them. So there's a reason for it. So you buy that one. Then about 4 or 5 years later, you buy another one. And then you get up to a total of a maximum of 3 rental properties, Todd. So that takes you between 10 and 15 years. So you started doing that 30, 35. So you're approaching 50. You've got 3 rental properties. Now the plan is to do the same thing in reverse. So you 1031 exchange, which is a tax move to save taxes, and you sell 2 of them and buy 1 bigger one and keep it a rental. And then about another 5 years later, you're approaching 55 to 60. You sell those 2 rental properties now and buy your dream house to retire in and keep it as a rental for 2 years. And then you sell your primary when you retire and move into that house, and you avoid all the tax consequences. By all, that's probably too strong of a statement, but you're going to end up owning your dream retirement home free and clear, and someone else has paid for it throughout your whole career. It's simple, but it's not easy.
I will tell you, I'm so glad we record. I have never heard someone put that so simply. That was awesome. That was awesome.
It worked.
So, guys, you may want to slide the record button back and listen to that another 2 or 3 times. What Jim just said, anyone could do. Almost anyone could do that. And that's a great plan. I love that. So simple. Oh, you give me goosebumps. Okay, Robyn, your thoughts on rental real estate?
Yeah, I think one of the big questions in the market these days as well is, hey, I'm about to sell a house that has a bunch of equity. It's my first home. A lot of people have an emotional attachment there as well. And maybe instead, this is my first, right? I've lived in it for a couple of years. Should I turn it into a rental and then buy that next primary residence? I think that's another avenue that a lot of people are seeing in terms of acquiring an investment property. You actually are turning your current primary into an investment property and then going to purchase another primary. I see that commonly in borrowers. I'm sure a lot of you in the audience per se have done that. Pros and cons to that. Some things that I think a lot of people don't realize. Jim was just talking about it. Hey, if you sell that property, let's say 5-6 years from now, you don't have the stomach for it and you're like, you know what, I don't want to be a landlord. I actually don't want to do this. It's not making as much money. I've had some bad tenants, whatever, things can happen. So all of that's going on and you haven't lived in it. You haven't lived in it in the last, 3 to 5 years, basically. You lived in it for the first 2, but you haven't lived in it for the last 3 to 5. You're going to pay taxes. And I think a lot of people just don't realize that. It's not that's a bad thing. It's that, are they processing all the information when they're making the decision to keep that current primary? Do they realize they're going to get taxed with it's a little thing called capital gains. Now, I'm not a CPA. None of us are. Disclaimer, tax laws change every year. But there really is a consequence to selling an investment property tax-wise. And so that equity that you think, hey, I've got all this equity right now, but I'm going to turn it into a rental and leave that equity there. In the future, you do end up taxed, just so you know. And so it's not, again, not something to deter somebody from it, but make sure that you have all the facts for your financial picture and that you're weighing everything in terms of, there's a lot of people say, hey, I want to keep my current primary as a rental and buy my next one, and they're scraping by to get the money to buy that next house, and they don't have enough in reserves liquid. And what Jimmie just said that is so valuable to those of you thinking of this out there, you do need some reserves. You're carrying 2 mortgage payments. And even if you think it'll always be rented, and let's be honest, there's a housing shortage, it should be, renters don't always pay. Things happen. And so I always tell people it's not a scary thing, but it is something that requires more thought than just, I currently own a home and I got approved to buy another one, so maybe I should just keep both. Maybe you should, but we got to make sure that you're weighing all the options, and a good loan consultant is going to weigh all of that out with you and go over all the items versus just, yep, you're approved. If you hear, yep, you're approved with no other additional information, there's something wrong.
Yeah, there's a lot of stuff here. That's really, really good tips. I agree with all of that. I'll share just a tidbit of my journey around this, and I really followed Jim's plan. So my first house I ever bought, I was scared to death. I literally bought the house for $127,000. And actually, Jim was my roommate. Long story back then. That was 28 years ago, something like that. And so I kept that house. My mortgage payment, include my taxes and insurance, was $900 a month. I ended up renting that house for years. I actually just sold it 3 years ago. I remember I bought it for $127,000. My payment's $900. I was renting it for $1,400. Rented it for years and years, 2 different renters. Eventually, my ex-father-in-law wanted to move into it. I rented to him for several years, and he wanted to buy it. He ended up buying it for $330,000. So you can do the math. At the time I owed about 50 grand on the house, and all of that, so 50 grand, sold it for, I think it was 325 or 330, and so. Yes, it took 27 years, and then I rolled that into an exchange into other investment property. So that works. Now, fast forward, now I'm 51. I own over $20 million in real estate, all free and clear. So I develop land. I own a commercial building. I own a strip mall. I become a mega investor. But it doesn't start that way. It starts with what Jim started with. I love the idea of, hey, especially for younger individuals, hey, buy your first house. I used to have borrowers come to me, and this is a great strategy for you or your children, depending on your age. Borrowers come to me. I remember the first one, he didn't realize this. He comes in, he's going to buy a duplex. Well, You can use a owner-occupied FHA loan to buy a duplex. One side is rented, you're living in the other side. And I saw him do this. I stay in touch with him. He comes back 3 years later, buys another one, right? So now, fast forward 4 years, the gentleman had 3 rentals because he bought 2 duplexes and he lived in one side. Now he's got 3 rentals. They were all major cash flow and he's living in one. So it's a process, right? It's a process. And I also want to give out a warning. Lot of sell jobs on this stuff. Lot of buy this tape, buy this. I don't think, there's some really good books out there, but whatever you do, formalize it, make a business plan around it. Even if it's the business plan Jim just talked about, write it out. Hey, on this year, I'm buying this house. Hey, develop rules. Hey, it's got a cash flow at least $400 a month or 75%. Put the stuff in writing. And I think this is where a lot of people go wrong. I met with a business owner yesterday. This is a true story. Wants me to buy his business for $30 million. So I meet with this guy, and we're having this meeting with him and his people. And I said, hey, do you have a written business plan? This is a 67-year-old business. Nope. Do you have a strategy plan? Nope. Do you have a marketing plan in writing? Nope. I'm like, that's why you're failing.
Yeah. Hey, I need to add something in before it skips me. So the story you were telling about your first house on, I think it was Chipley, if I'm not mistaken. It's like a standard tract home,
Yep.
2-story. I think it was 4-bedroom, but I could be wrong. But people, the people that are listening to this are mostly past clients of Summit Funding. So your loan officer is going to be able to go through the details in the plan that Todd's talking about. But one of the key things I wanted to focus on was when you bought that house, Todd, I remember you did FHA. So it was 127. So how much was your down payment?
3.5%.
So that was about $6,000 plus closing costs, maybe $8,000. So you controlled, guys, listen to this, controlled a $125,000 asset for $8,000 out of your pocket. So people go, oh, the house was 127 and it sold for 330, so it tripled. But man, it took 27 years. No. He spent $8,000 and it went to 330, and he paid off the mortgage. I should say the renters paid off the mortgage during that time. So how much did he really multiply his money by? Now you understand why people buy real estate. You get to control an asset that is so big with such a small investment, relatively speaking. And you get all the gain. The bank does it in some countries, Todd, the bank takes a percentage of the gain.
Yeah.
They look at it as a business partner. And if you go do a rental property and they own 80% of it and you own 20, they get 80% of the profit. I was doing a loan for a guy from, I don't remember what country, and he told me that. I about fell out of my chair.
Yeah.
I'm glad I live in America, bro.
God bless America.
I would just emphasize that point because these guys are like, hey, average person buying a rental property, that's the why.
Well, and I think the other avenue that's become so wildly popular right now is Airbnb, right? VRBO. I mean, that's a whole new world of short-term rentals is what we call it essentially. And so, hey, you might, Jimmie, you love the outdoors, you love to adventure. Hey, you could buy a home in Tahoe. It probably would rent majority of the year, and you and your family go enjoy a few weeks vacation there because you own the home already, and the rest of it pays for itself potentially. And so that's become a really popular method. The risk there is that a lot of people want to do that as a second home, but then have the rents come in. That's overall, I mean, people do it all the time. However, it is important that as a second home, the difference as a consumer is you have to be able to qualify with both of those payments without any rental income. So both your primary and your secondary residence. The other thing that I think is a myth around buying an investment property, Todd, is some people think the only way it's an investment property is if you don't own a primary. And that's actually not the truth. Mm-hmm. Buying an investment property is actually, I have a client who's bought all over the United States in lower cost markets because he can afford to ultimately buy those investment properties as far as down payment and things go.
Oh, yeah.
But he didn't own a primary until he bought his 7th rental.
Wow.
7th rental all over the United States. Now he's gutsier than I am. I haven't done it that way, but that's something that he decided to do in different markets. And so the one thing I would say is make sure that you're educating yourself. You're not making a snap decision, right? Your assets, you really are prepared for what, we would call worst case scenario, that what you're, getting into and how to get back out of it if necessary. But I do think there is some beautiful wealth that can be built in owning real estate and doing it smart.
Yeah, to Todd's point, and I'll bring this back to you, Todd. But to Todd's point, you can tell just from these 3 strategies we've been chitty-chatting about how complicated it feels. Right? It feels complicated. But when you go talk to a guy or a girl who does real estate every day, like the loan officer that you used, we will uncomplicate it for you.
Yes.
And that's how you can come up with your written plan, which, as Todd has demonstrated, is the secret to long-term success.
Yeah, a couple of tidbits on that, because I think you guys are hitting on something here. I'm thinking of the listener that's like, dude, how do I even get started? So first of all, if you whatever loan consultant you used across the U.S. from Summit, thank you. But meet with them again, and we have little books, PowerPoints that say this is how you buy investment real estate. We teach classes on it. So there's all kinds of opportunity there. But the other part is, and we all have come to know this as the bigger pile principle. Mm-hmm. There's a family member, there's an uncle, there's a friend that does own rental real estate. Go meet with them, right? If they do it successfully, be transparent about your questions. Like, hey, are you willing to share with me? What exactly is your mortgage payment? What's the cash flow? When did you buy it? How much has it gone up? Have you ever, during the meltdown, did you get scared? Like, just find a good mortgage professional, but also find another mentor that has results in that area that you can learn from. And what's amazing? I'll tell you this quick story. I was considering buying this commercial property, and it was my first one. And I kind of knew this guy from my golf club, but I didn't know him that well. And I found his numbers in the golf handbook thing. And I just called him. I said, bud, this is a big ask, but would you meet with me for an hour or 2 about how to analyze this building I'm looking at? Because I don't want to make a mistake. He said, no problem. How about Sunday morning? Went to breakfast with me on a Sunday at 9 a.m. We didn't leave the restaurant until 1. It's an uber successful developer. And so my point is, I've done that tons of times. If you ask people for help, they will give it to you. It's shocking. It's shocking, right?
Just ask the right people.
Yeah.
There's a lot of people with advice out there that maybe shouldn't be given advice. So
I might have chose the wrong mentor once or twice in my life, but I picked up like that.
Yeah, there's all kinds of lessons there. Find someone that you trust, find someone that's got the results, and don't be afraid to ask them, right? Someone was asking me yesterday about hiring this financial planner, and said, well, she's a really good friend. I said, ask her how much money she makes. How long has she been managing money? How many clients does she have? I couldn't ask her that. She's a friend. I said, not that good of a friend. I said, ask those questions and then call me back, right? You got to qualify people, right? And so that's the idea there. Any last thoughts on buying investment real estate?
My only last thought is don't be scared of it. You've been thinking about it for 10 years and never do it. And so education is the key to eliminate fear. Get educated, ask a lot of questions, and then you'll know.
Yeah, knowledge is power. And if you get the knowledge now, you might get the plan, which could create the results later. And so, this is a touch of the knowledge that you need to maybe go start exploring. Hopefully we spark some curiosity. Get with your loan officer, go talk to them, get a plan together, build a team around it that will help you and educate you and prepare you. And if that's a lifelong goal, then let's make it happen.
Nice.
I love it. Good stuff, guys. So do me a favor, guys. If you appreciated this, text it or send it to one person. There's someone that's thinking of buying investment real estate. This may help them. And just to be clear, because a lot of people ask me this, Summit Funding is a nationwide mortgage company that does anything to do with home loans. So it's jumbo loans, it's buying a house, it's refinancing a house, it's low down payment, government assistance. We do it all, right? That's what we've been doing for 27 years. So guys, thank you for being past clients. I hope this helped. Robyn and Jim, thank you for being on. Make it a great day, guys.